Good morning. It's Harvey Jackson. Just going to go through some of the Trump trade and key priorities that he laid out on day one. And some of the key things I'm going to talk about here is there was no tariffs on Canada, but he did set up an external revenue service, and I think that's maybe if we look at the timing of what he's doing and the delay of the tariffs, he definitely wants to have some means to generate revenue by putting tariffs uh, on countries, and it might be more specific to very specific goods. Now, what does Trump have that it kind of bothers him? And, from Canada would be softwood lumber, because he thinks that he can get the lumber from his own country pretty cheap. And U.S. has always been bothered by that one. And the other major one that I would talk about on the egg side is the dairy and the supply management, and he wants access to the Canadian government or Canadian consumer there as well. But if we look at just what is made up of it, so the U.S. exports 354 billion worth of goods to Canada and 322 to Mexico. And that's very significant as far as who's dealing with who. So to just lay on tariffs and not have some uh, uh, means to collect that money, I think he's going to be very specific. One of his first priorities that he mentioned in his inaugural speech was or tightening up the U.S. at Mexico border, and I think that was the main key driver of what he wanted, and that's what definitely was something that he talked about on just about every chance he had on the campaign trail. So the system overhaul is actually probably the biggest deal, I think, and that's probably what's going to drive even some of the decisions what he's going to put a tariff on. Because there's a big deal with China being that the differences that they have there, and I think that's probably the direction he's going, using the external revenue service and applying tariffs very specifically to enhance the standing of the U.S. over anybody. So some of the other things he did talk about is drilling. So drill baby drill is a scenario that he talked about. Um, using strategic reserves, Paris Agreement. He withdrew EV mandate so that there's no monies going towards the EV subsidies anymore, and offshore wind. He's shutting that off. And there's some DEI and basically trying to get rid of some of the woke things that got put in with the last administration. So corn hits more than 1 year high on Argentina drought, and point that out a little bit later as well. And the article here by Karen Braun just talking about how soybeans actually is now in a long position versus it's been maintaining a short. So we'll see if that continues. And then just looking at all U.S. grains and oilseeds, and it's actually now net long. Here's your progress for harvest. It's very well delayed at the bottom of the range, but remember they had planting at the bottom end of the range. So expect your planting to get delayed as much as your harvest. So if you had a slow start to planting, and I should maybe bring up planting delays, they were running in the bottom and all of a sudden they just shot straight up. So don't expect that this is anything, going to have any implications, but it might have implications on corn on later planting. Uh, another article that I pulled from X was this one here, where it was just talking about the soybean and Indonesia palm oil and soy oil, just where the prices are, and you can see that some of them are pretty close to the bottom, and then you got the Malaysia palm oil up there, and then canola is down in here as well. So that's the only one that's missing is canola being the cheapest one on the planet. So there's still lots of hope for us here, and that just leads into where's our crush? Where have we seen our crush? We are currently at call it 400,000, not quite 400,000 metric tons ahead of last year at 5.3 million metric tons, and this is maybe what's a little bit disappointing is just what is that percent? But you got to remember all the stuff that's been going on in the U.S. jockeying and their renewable fuels and wondering how that's all going to play out. Because I think, and might have this wrong, but the repealing of the of most of the Biden tax breaks will probably get rid of even the 45Z that we talked about last week, because I think that's a Biden tax break or tax incentive pay for oils, and now we won't be zero, everybody will be zero. So we'll see if there's going to be new stuff that comes in there. So here's a bit of a look at, and what I'm paying attention to is only this square here, just to see where exports are. And this is a vessel lineup scenario, and you can see that we're starting to get a lot more color on the screen as far as countries and destinations. Um, so this is a position that Kyle had on, and rationale, and this is still active. I know a lot of my clients actually have trailing stop hit on the profit side, and uh, debating what to do there yet. Maybe I'll see how this market trades into the morning before I make a decision on that one. So here, if we just look at the market, canola is down 11.30, and rapeseed is only down 2.75. Soybean oil is basically flat from yesterday, or from previous day's trade at only 0.06 of a penny down. Palm oil is up, and crude oil is down $1.85 or 2.4%, and it was down again yesterday too. So soybeans are up almost 1.52% at 15 and a half or 15 and three quarter cents up. And wheats are trading up a little bit with strength here as well. Corn's up, and the Canadian dollar is up from its lows that it made yesterday as well. So let's just have a look at each commodity. Canola, nice candle yesterday, and down a little bit today, but we'll just see if that one's going to engulf that other update that we had yesterday. So that's what I'm waiting on, and if we can stay above that, those two moving averages there as well would be. Here's just the longer term, still looking up on the November. Rapeseed at $172. Uh, European rapeseed is more expensive in Canadian dollars than Canadian canola. So continue to see canola find demand because of that. Here's your rapeseed, actually got a nice little wave up here, and another wave getting in the right direction for support of even canola. Soybean oil, a little bit of pause, and it's still sitting at its highs that it's made last week. Palm oil, it seems to be not much of a story here, but it still looks like it could be in this downward trend here in this channel, but supported with longer term moving averages. And it would be nice to be able to trade around and above some of these other moving averages to be able to get some support. Western West Texas, a few down days. I expect to maybe have a few more, just with the thought process that there's going to be a little bit more drill baby drill scenario with Trump, and that ultimately helps all economies, like or all parts of the economy. Unlike the tax that we have in Canada, that it hurts all parts of the economy. Soybeans still in an uptrend. Almost, I would have to dig into the exact, but it almost looks like it's a could have created a gap, but it's a nice leg higher on this drought news. Here's the Canadian dollar. We had a pretty wicked move to the downside, and now trading towards the bottom end of that range. Let's have a look at wheat. Wheat is still dragging along on a sideways move, and still the same thing for the new crop, looking to get into that higher end of the range. But it's going to take a story to get there. There's nothing in there right now, other than when we get to corn. Corn could end up driving some demand into wheat as it gets more and more expensive, and that's something to watch if we're going to get to the $5 mark there as well. And that's all I have for you, and look forward to maybe running into a couple of you guys at the Manitoba Ag Days tomorrow. So we'll chat with you later. Take care.